Bitcoin in the short term is truly tormenting. It's designed to really stretch you and push you and exhaust you. You can see an example of this. It's 7 days of green stair-step candles that take you higher to then just come crashing down in 2 red candles, taking out that whole 7-day gain. Now, that's just the nature of the beast. I want to go through why we are not close to a top and actually how you can use certain signals to show that there still is room left for this asset to grow before it goes on a more long-term correction. So those 6 signals that I want to go through them really quickly. So please like, subscribe, share the video with anyone else. I'm going to try and do this on a weekly basis so that I can really follow and track these signals and see what happens. And I think they will indicate a real signal of where we're coming to the end of this market. So the first one is the golden ratio multiplier. Second one is the Mayer multiple. Third one is the death cross. The fourth one is the power law resistance line, which I don't subscribe to, but I just know that it can be useful as a North Star to guide where potential long-term resistance will come. The fifth one is the pi cycle top. And the final one is the MVRV score, which I think is very useful. So stick around, we'll go through each one, we'll see where we are currently and how much room we have left to grow, because I think that there's still a lot of room left in this market and it's quite exciting. And we're about to enter into the more euphoria type part of this move, especially over the next few weeks with the new president and the new administration. So let's get into it. Okay, number one, the golden ratio multiplier, which is where the 350-day moving average price for Bitcoin is multiplied by a significant Fibonacci number, such as the 1.618. Now, when you multiply the 350-day moving average by this number, you start to create these resistance lines that can indicate the direction of Bitcoin's price. And usually when it touches these resistance lines, it usually signals a rejection and it's ready to mean revert back down, and that's when the long-term correction starts. So that's a really useful sign, and at the moment, that resistance line is signaling a potential of 200,000 plus for each Bitcoin. So we'll see if that happens. But it's an indicator that I like to look at because it gives you a general direction of where the market's going. It might not exactly touch that number, but it gets close, and you can start to factor in your decision-making, whether you're going to stick around, are you going to take off some lifestyle chips. You can start to kind of plan ahead and you can see where we're going. So it's very useful. Okay, number 2, the Mayer multiple, which is where Bitcoin's price is divided by the 200-day moving average. This provides these different step levels, and the indicator shows that at 2.4 and above, that's when the asset is overbought. And underneath that level, it's where there's still room for expansion and it's usually oversold. So if you look at the previous cycles, you've got, it reaches so many different levels, 7.5, 4, 2.8, and we're currently only at 1.5. So that shows that there's still room for this asset to grow. And this is, again, another really useful indicator that a lot of traders will use before they make any long-term decisions. So definitely something to be aware of. Okay, number 3, the death cross. This is where the shorter-term 50-day moving average crosses over a more longer-term 200-day moving average. When these cross and when they start to get close, it signals a bearish trend. And you can see, again, in prior cycles where Bitcoin had reached its high for that 4-year period, it usually happened during these death crosses because they signal a longer-term downtrend for the asset. So again, another indicator that can be useful to track and follow, especially over the next few months as I update this every week. Number 4 is the power law resistance line. I don't fully subscribe to this because I feel like it can be quite difficult to make long-term fundamental decisions based on lines because market dynamics might change. Sovereign wealth funds might invest, corporations, large corporations might decide to add Bitcoin to their treasury balance sheet, and these are always going to be hard to anticipate, and these power lines are in place, and they've been in place since the beginning of the cycle. So what they try and do is they show that Bitcoin's price is time raised to a certain exponential. So when you put Bitcoin's price into a logarithmic chart, you can see that it creates a more curved, more smooth price pattern. And if it hits these lines above and below, it usually shows these are significant areas of support and resistance. Again, it could be useful as a North Star on what this cycle power line is indicating by the end of the year in 2025, that Bitcoin could touch 400,000. I don't believe that'll happen. I think that's extremely bullish and very high. And I would say that it's going to hit a significantly lower number. However, this power line shows that that is where it would meet significant resistance if it was ever to get to that level. So very important to have as an indicator that gives you a longer-term fundamental idea of where the asset could go over time many years from now. Okay, number 5 is one that I really like. It's called the Pi Cycle Top, and it just shows that when the 111-day moving average crosses the 350-day moving average, that is a longer-term move where if that 111-day moving average crosses over, and even if they just start to get close, it signals the potential end of the cycle, because a lot of traders and a lot of people will be aware of this, and they'll start to trade and make decisions to sell when they start to see these lines close to each other and start to touch. And whenever they have crossed in the past, you can see they usually signal the peak of the market. That Pi Cycle Top has always been that pico top of every cycle in the past. So if it has worked in the past, it usually rhymes into the future. It doesn't always repeat perfectly, but it could be, again, just a simple indicator that you can look at and go, okay, these lines are getting close. Maybe it's time to take off a little bit of risk and move into something more safe, just in case. And if it does cross and it does lead to a downturn, you're able to buy back in again at a lower price. And that's just a great plan to have going forward. The final indicator, which I like the most, is the MVRV score. And it's market value of Bitcoin and the realized aggregate cost basis of all of the coins in circulation. So what that means is if the aggregate of all the coins in circulation is 40,000, which is what the average person has paid in the market, and the current market value, the current price is over 100,000, that ratio, that number is going to be very high, which means that if you see that the majority of people have paid 40,000, the price is now over 100,000, there's going to be a temptation to take profit, there's going to be a temptation to take some lifestyle chips off the table, and as that temptation rises and increases, you can't really blame people for being tempted to sell and obviously bank profit and turn that into something else that they might want, liabilities they might need to pay for, a holiday they might want to pay for, a car that they might want to buy. It's personal, but it's definitely an indicator that shows the human emotions of the market. If you are in profit significantly, you're most likely going to be okay being able to sell and exit that position. So it's a really important indicator. It's one of my most important. And I'd say that right now we're looking at a score that is only 2.9. Usually this score can go over 7, and usually when it gets close to 7, that's when you'd want to start to see yourself taking some profit, starting to become more defensive, and start to especially reduce the amount that you're investing. If anything, you just wouldn't invest at this point, and you just wait until it comes back down. Okay, if you got value from this, please like, subscribe, hit the notification bell so you can get more of these more weekly updates. But could it be relevant? There's a few things that determine whether these indicators are going to make a difference. Now, they all have historically been useful to signal the top of the market, but at the same time, you've got to understand the market dynamics are driven by the macro events. So are there wars in the world? What is the political landscape like? What are the current capital markets in the USA like? And usually if there's extreme likelihood of a recession, then there's obviously going to be assets like risk assets. All of the private equities that are in technology are going to be hit the hardest. So something that I like to look at is the ISM, which is the Institute for Supply Manufacturing. The top 300 CEOs are procuring more products, which means that there's more growth in the economy, which means that there's more people in the economy that have money. And therefore, as these companies expand their production lines, it shows that there's health in the economy. And currently, it's at 54.1. Anything over 50 shows there's expansion. These numbers can go as high as into the 60s, and so there's definitely still room for growth, and that shows a positive direction. And the other indicator that shows a macro trend that's positive is copper's price. Now, when copper is going up in value, which it has been recently, it's kind of acting like a signal that the market is healthy. All of the products that include copper, all of the companies that need copper to manufacture, shows that they're making more, they're growing, they need more supply, and that just indicates that companies are doing well, they're growing, they're going to need to manufacture more products, and the copper that's required for that shows that the demand for copper is going to lead to a healthier market overall. So again, I hope you got some value from this video. I want to do these weekly, so please hit the notification bell so you're able to kind of catch them at the more relevant time of a kind of more up-to-date view of the numbers. Hope you got some value from this. It's been extremely useful for me to be able to follow these indicators and understand how they can be helpful North Stars as you enter into more speculative bubbles within the market. When things start to get really euphoric, you're able to kind of have a objective mindset when you make a decision. And it's not going to be based on emotion. It's going to be based on real indicators that can be structured to help you make decisions that can lead to you being able to take some lifestyle chips off the table. So I'll see you in the next one. Thank you very much.